Welcome to Jill on Money, powered by The Compound. I am your co-host, Jill Schlesinger. I'm joined by my executive producer, Mark Talercio. Hey.
Hello, Jill.
Today, we're talking about why mortgage rates remain high, even though the Federal Reserve is lowering interest rates. Mark, I'm sorry this hits so close to you. He's sad. He's a sad man.
Would these rates just come down a little bit?
Okay.
Instead, they're going up.
Okay. Why interest rates diverge is very interesting. So the deal is that the Federal Reserve, it controls short-term lending rates, the overnight rate. And so the Fed has now cut rates twice this year, a half of a percentage point, then a quarter of a percentage point. They're probably going to do another quarter of a percentage point in December. So that'll be 1 full percentage point before the end of the year. And yet
rates are going up.
Why are interest rates going up for longer term bonds? So the 10-year Treasury, that's the bond, the obligation from the U.S. government on which mortgage rates are based. So let's just kind of go review in history. Let's go back 5 years. And we know that before COVID, interest rates were low, but they went even lower amid COVID. We were at 0% interest rates in the overnight lending rate. And accordingly, the interest that you would get paid to lend to the U.S. government, that interest rate went down really, really low. Like we're talking, you're going to lend for 10 years, you'll maybe get 3% interest for that, maybe below 3%. And as a result, mortgage rates cratered. And I believe that, I guess the very bottom was 21. Is that about right?
Shortly after COVID, yeah.
Yeah, 21-ish. In 2021, we were hearing about people refinancing 30-year fixed rate loans at 2.75% or 3%. And, you know, even if you look at where we are today, almost 60% of all mortgages that are outstanding, not just under 60%, are below 4%. And yet, we now know that after the Federal Reserve raised short-term interest rates to combat inflation, so too did mortgage rates rise. The 10-year Treasury yield went up, and mortgage rates went as high as just under 8%, I believe. We were at an 8% fix. They came off from that. It looked like we were sort of heading down towards low 6. And then, boom, all of a sudden, rates jumped up a little bit. Now we're at 6.8, almost 7%. So, Mark, is this the moment where you're feeling like you want to capitulate? Explain to folks where you are.
No, I'll explain. And like you said, I think people think there's a direct correlation between what the Fed does and mortgage rates. I wish that was the case. But yeah, we took out a new mortgage earlier this year, January this year, and it's a huge loan. And we got a 6.5. And our prior mortgage was a 3.5.
Oof.
So you're talking 3 full percentage points higher, and it's a mother, man. It's a mother. Yeah, I mean, you know, I'm trying to patiently wait for them to come down. It's gonna happen. I mean, everybody we speak to, every mortgage industry expert we speak to, every real estate person that we speak to, they all say they're gonna come down, but they're not going back to 3, or if they do go to 3, then something's really, really wrong in the economy, which you probably don't really want that. So what should we expect? I mean, everyone we talk to says 5s, you know, low 5s, maybe high 4s, which for someone like myself, that would make a huge, huge difference.
So how long do you have before you can actually before things shift for you and it's out of your hands? You have a 10-year period of time?
Yeah, we have an ARM. We went with an ARM because it gave us a slightly lower rate, and we have a 10-year ARM. So, you know, we have time. I suspect that within the next few years, something should happen. But it's not going to be, it's not happening within the next 6 months.
You know, I was on CBS Mornings and I was just researching this. And for right now, mortgage rates have been above 6% for 2 years.
Yeah.
So is 6 the new normal? Maybe it is. Maybe if you got to 6 or high 5s, that would be very encouraging. I think there's 2 issues that are outstanding that are keeping mortgage interest rates high. Okay. Number one is, whatever you think about the economy, it's still growing, okay? This is not about anything other than economic growth as measured by the gross domestic product. The U.S. economy is expanding, It is, okay? And it has been expanding. And amazingly, if we look back 15 years, we had a terrible recession in 2008, 2009, and it lasted a long time. We had a very deep but short recession in 2020, and we've just been growing since. And so economic growth is something that tends to keep interest rates on the longer term basis higher. So that's one part of the high mortgage interest rate question. The second part is election related because there are a lot of investors who are concerned that part of the next administration's ideas around tariffs, these Trump tariffs, that could, if put in place as the president-elect talked about on the campaign trail, if those tariffs were to go into effect, even not fully, but partially, it would contribute to inflation. It would keep prices high. And that in itself would actually keep longer term interest rates higher for longer. So if you're sitting there with a 6% note, don't presume that you are going to actually refinance. Do run your numbers if you are buying a home. And if you can make it work at 6.8% and you do get a chance to refinance, great. To be clear, there are so many people who took out mortgages at 13, 14% interest, decades ago. We're able to refinance. We're able to accumulate wealth. So there is a case to be made. You're going to be okay, but you got to run the numbers.
And you got to be patient. It's not going to happen overnight.
It's certainly not. And it's certainly not going to happen now. And by the way, it is hard to predict the next 3 months, 6 months, year. But what we can generally presume is that for in Mark's case, there's going to be an economic slowdown over the next 10 years. Okay. And when the economy slows down, more rates will come down. And I think you get a shot to refi.
You're telling me I got to wait 10 years?
No, I'm just saying, I know the probability is that it will happen. So if you're thinking about whether or not to refinance, whether to buy, if you're worried about mortgage interest rates, get in touch with us. Go to jillonmoney.com, click the contact us button, and we want to cover those issues for you. And if you like what you see and hear here, subscribe to us, leave some comments. And if you've got follow-up questions, we're happy to answer them. Today, we're just saying, take a deep breath on those mortgage rates, run the numbers, and we think you're going to be okay. Patience. Patience is a good thing to have in life, okay? So time limited. Thanks for watching.